how to set price expectations so you know when to take profits. Today, we're going to dive into day number 4 on the Ethereum Follow Me. And it's all going to be about price projections so you can anticipate what the trend is likely to do if it takes off. So if you're ready to rock and roll, let's dive straight in. All right, so we've got a chart of Ethereum over here. We've been following this for the last 4 days where we're long over here, and we anticipate that this high is going to get exceeded. But what we want to really know is that the market tends to move in fives and threes, 1, 2, 3, 4, 5. But I'm going to show you today how you can set with accuracy price expectations. So first, what we're going to do is we're going to actually use this information here, this 1, 2, and then we're going to set a price target for this wave 3. And then we're going to do the same for this whole macro move in the exact same manner. So if I just take this price data back to, let's just say here, we're using TradingView, and it's brilliant software, and it allows us to do many things. On the right-hand side, you're going to see this panel, and it gives you a load of tools. And the tool that we want to select is something called trend-based fib extensions. Now, Fibonacci is a ratio, or it's a golden mean that applies in human nature time and time again, but it was discovered that it applies to market buying and selling behavior. So we're going to select this tool, and what we're going to do is we're going to do two things. I'm just going to show it to you like this, so it's really clear for you. Is we're going to click down here on this level, and we're going to measure wave 1. So we're going to basically measure this distance, and then we're going to project it or extend it from this point here and extend a price target. And there's a particular ratio called 1.618 that we're going to use. And we're going to show you how to use it on TradingView, and you can do this with any chart and any market that you're looking at. So let's take this low of the wave 1. Just going to make sure I get it right on the low. And then second click is at the top of the wave 1. And then at the bottom of wave 2. And this green line that we've just got on the chart, you can see here it's got the ratio of a 1.618. Now if you double click it, you can see you can select different ratios. You can change these and everything else. But the key ratio for this, like wave 3, it's called a wave 3, is 1.618. And what you'll find time and time again is that the market just tags it when the trend takes off. The trend doesn't always take off. So if we just unfold the data now, I mean, this is in hindsight, but we're also going to do it in foresight. So we just see the market going up and down. And again, I'm just going to squeeze it in like so. And then we can see that it tags the 1.618. But there's another thing I want to show you today is this. What pattern do you see here? Is a move up, a move down, a move up. Then we should anticipate another move down and another move up. Why? Because markets tend to move in 5s and 3s. And we can tie in the 1.618 with a 5-wave wave structure. So when we're seeing this, it looks like a 1, 2, a very clear 3. So we should anticipate some type of pullback similar to this before we get one more leg to the upside. But we know we're in this region now, 1.618. So what this tells us is we should be getting ready to take profits. Take profits if you want to trade the wave 3, and then you can look to re-enter on a wave 4. So let's just look at this. And I'm showing you this because this is what we're going to do live. So this is in hindsight. So we had some type of pullback. So when we see this like this, when I see this, what I see is we got to move up, down, and we should anticipate one more move up. And these are called different degrees of wave counts. Another way is it's like a different size of count. There's different levels of psychology occurring, and we can even draw it like this. Why is this powerful? We're combining two things that are indicating that we're coming towards the end of a wave 3. And then as we unfold the data, we hit that wave 3, and then we get a slightly different correction, right? So why is that important? Well, now we're going to do that going forward. So that was in hindsight. That was history, right? That was between June and July, right? June and July, those price movements. But now if I just go back to the live data where we're at right now, I can get rid of this over here, and we'll get rid of this. We're going to now do the exact same thing, but on a bigger degree wave count. You go, what do I mean by bigger degree wave count? Well, initially it was a wave 1, 2. That was the wave count over here. But now the bigger degree is this whole move to the upside is a wave 1. And this whole big move to the downside looks like a nice clean wave 2. So we can apply the exact same principle, the exact same ratio, but on a bigger degree to set a really clear price objective if the Ethereum trend really takes off. So So we can do the exact same thing. So let's have a look. Let's measure this low. We're gonna take this low. Oh, by the way, I've got the 4 Secrets Masterclass. If you haven't taken it already, take it. It's free in the link below. But this is what we talk about, how we can combine Fibonacci ratios with the psychology of patterns, so you know when to buy, when to sell. It's free. The link is in the description below. So what we're gonna do now is the exact same thing. We're gonna take this low, but this time we're gonna take this high, right? And we're gonna project it from this low, right? So it's gonna require 3 clicks. So again, we're gonna go to the panel on the left. We're gonna select trend-based fib extensions. I like to hover towards the right, so the lines show on the right-hand side. But on the left, I'm measuring it up to make sure it gets the low. We're gonna measure the high, and then we're gonna project it or extend it from this low over here. And you'll notice that you can't see any lines on the chart, right? Why? Because the number is 1.618, so it's extended into the future. There's other key ratios as well, but this is the one that we want, the 1.618. An overextension, just so you know, for Ethereum and any market is 2.618. So we actually draw the 2. Now what we're going to do is just going to zoom in, or zoom out, should I say, like so. I'm going to get both of the lines on the chart so we can just see both of them. Here we go. So what this indicates to us, just in the same manner that we saw before, with over here, we measured this, projected it from here, and we saw a price target that gave us valuable information, knowing that we're probably going to get a wave 3 top before we got some type of correction, and then we got a wave 5. Here we got the same thing. The next next Ethereum target, if the trend really takes off, is 1.618. And that's around $2,500 in terms of Ethereum. And if it overextends, then it's above $3,000. So these are the most common targets. And what would really confirm those targets that we should be really on high alert? Well, it's really if this high gets exceeded and if this high gets exceeded, especially this high, right? This will confirm, this is the confirmation of the wave 2, but this is like the final confirmation of the wave 2, and we've got something else, a good trend taking off. So that's what we want to do today. You just really focus on setting trend expectations. How is the trade going to take off? Well, we don't know, right? We don't know. But what we have in terms of our information is that the momentum is up, is a clean, clear pattern position, there's a price position, and everything else. So now you know how to set some of the key ratios with Fibonacci. Now, in the masterclass, just so you know, there's a few of the other key retracements ratios that I cover. And that really helps you to know when to buy, when a correction is often over and a new trend is going to begin. And it's all about how to make money from the markets, but stacking the odds in your favor. So do check out the masterclass. It's free, it's for you, and just take lots of notes. So if you like today's content, like, subscribe, hit the bell notification. Let's read a quote from my book, which you can now also download. I've put the link in the description as well. It's free. You know, I want to get some major value to you. A lot of mindset stuff in here. But I want to cover chapter 3, right? Because a lot, when it comes to making money, we operate as unconscious beings with everything, 95% unconsciously. So we want to make sure our goal setting process, our thinking process is correct when we're doing any business, especially the business of trading the markets to make a profit. So Confucius is today's quote. It says, "It does not matter how slowly you go, as long as you do not stop." The other way I like to say it is, everything is difficult before it's easy. Whether we are driving a car, whether you're trading the markets to make some serious money. But it's just around practice. What we covered today, the pattern positions, measuring the 1.618 and projecting it, extending it forward. Initially, it's a bit difficult because you have to click the tool. You have to know where to click. But if you've done it 10 times, 20 times, 50 times, you do it 3 times a day, every day on different charts, different time frames, then all of a sudden, like with any skill, it will become second nature. And then you'll be able to see things like the buying and selling psychology playing out. And then you can anticipate what's very likely to happen. So you can time when you should be taking profits, when you should be standing aside, and when you should be buying.